Hello and welcome to this August 25th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at Martin Marietta Materials, ticker symbol MLM. This is about a $3.3 billion industrial company. Taking a look at the chart technically, you can see back in February when the market had sold off before the rally into April that MLM had come down, put in pretty good price support down around the 75.5 range on a closing basis. Intraday we had gone below, but we never had an open or a close below the $75 area, so that's a key support level. After we had risen back in April, you can see late April, early May, we put in a top, started drifting lower. We broke below the 50-day moving average. The 20-day moving average broke below the 50-day moving average, and since then we have not been able to recover in any meaningful fashion. We did have a nice move up in the second half of July, got up right up to the 50-day moving average. We put in this bearish engulfing candlestick, and then we resumed our slide to the downside. Now Tuesday's move was critical in that we lost that $75 closing price support, and we did so on increasing volume. So this would portend of additional weakness down the road. However, we do have to keep in mind RSI right now is at 28, and we've got stochastics in single digits down at 9.5. So we do have some oversold conditions. So the breakdown is occurring with our momentum oscillators in oversold territory. I wouldn't be surprised at some point, it may not be immediately, but probably over the next few days, we'll see a rally back to test this $75 area. That's an area I think that could be used to consider going short on any kind of a rally attempt. So that's what I'd be looking for. Now the moving average convergence divergence, or MACD, is very weak. It is still pointing down. Even though we've been in this downtrend for a while, we do not have a positive divergence in play. So if we do see any strength, it's probably going to be very short-lived before we go down and put in another low. So again, I would look for maybe somewhere around the 75.5 area to consider putting in on a short position. Ultimately, if you look at a chart that goes back a couple years, you'll see that there was a support area down around the $66, $67 area, and that's where I would look maybe for MLM to eventually wind up down the road. So if we can get a pop back up near 75, that would potentially give you about $8 or $9 to the downside. And from a stop standpoint, we just broke down below these recent closes down at about 76.50 or so. So if you get in around 75 or in that neighborhood, you probably can keep a closing stop somewhere in the neighborhood of about 2%. So not a whole lot of risk here to potentially try to gain $8 or $9 to the downside. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.